morning, ladies and gentlemen. Thank you very much for joining us on today's episode of True Potential's Morning Markets. You're joined by myself, Matt Henderson, and I'm one of the portfolio managers here at True Potential. If we cast our mind back to Friday's asset market performance, markets were noticeably weaker, particularly within the US. So US equities down 2.8% yesterday. Now, what we like to think about here at True Potential as an investment team is actually what markets have delivered over that entire week. If we think about US equities in sterling terms, and given the strength of US dollar that we'd seen throughout the week, US markets actually provided a positive return of 0.6 to sterling-based investors during the week. Now, why did US equity markets perform the way they did on Friday? Well, we had a significant data release on Friday. So we had the US non-farm payrolls data. So that's all about the employment side of things. What we saw in that release was a gain of 263,000 jobs to the US economy over the month. And that was roughly in line with market expectations of 255,000 jobs to be added. Now, that might seem a little bit counterintuitive as to why equity markets fell off the back of a strong employment reading, but it's all to do with the anticipated movements from the US Federal Reserve. With tighter and stronger labour markets, it's likely to have an impact or a secondary round impact on inflation. So the markets are pricing tighter monetary policy coming from the Federal Reserve when they next meet for their FOMC meeting. The other bit of central bank news to bring you is from this morning and from the Bank of England. As we've covered in these videos previously, Bank of England have intervened in bond markets and the gilt market to provide some more stability. And what they had done was say they would buy up to 5 billion worth of gilts through to this coming Friday. What the bank have announced this morning is that they're willing to increase the number of purchases they're willing to do from 5 to 10 billion. However, the programme still closes come this Friday. The additional thing that the bank have therefore enacted is another facility to provide further liquidity to the market. So still looking to provide liquidity to the markets and offer support when it deems necessary. Thinking ahead for the coming week in terms of important data points, they're mostly US focused. So we have two inflation prints coming from the PPI or producer prices indices and also the US consumer price index or CPI indices that will be released later this week. Once again, and fairly obvious, it will offer investors insight into how inflation dynamics have evolved in the US and also the likely impact that that will have on Federal Reserve policy at the coming meeting. The other significant part of information coming out of the US is the FOMC minute meetings. So that's from their latest September meeting and gives investors an idea in terms of the things that the committee members had been speaking about in their latest meeting, which was September. The other dynamic that market participants have to deal with over the coming week and weeks ahead is the start of Q3 earnings season in the US. Now, so far, we've had a very small amount of those S&P 500 companies report, only 20 so far. But coming up this week, we've got some of the larger financial names, the likes of BlackRock, JP Morgan, and New York Bank of Mellon. So those are some of the bigger names coming this week. But really what market participants will focus on is guidance from those companies. So looking at how demand dynamics have changed and also how spending patterns have changed as a consequence of the high inflation dynamics that we've seen so far this year. The other place where inflation will feed through is just also on corporate cost structures to see how they've evolved given the higher pricing that we're seeing. Market participants will also be interested to hear about employment intentions and also how the strength of US dollar has impacted earnings over the quarter. So we'll keep you up to date as more earnings announcements are made. And thank you very much for watching today.
If you're interested in taking your investing to the next level or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.